So, good morning, active traders, and welcome to our trading month ahead broadcast. I'm Ken Calhoun, your host, coming at you live straight out of Colorado here on Groundhog Day, which, in addition to being a great movie featuring Bill Murray, is a day where we think about doing things over again, right? Things that repeat. And as pattern day and swing traders, we want to get repetitive profits out of patterns that we know work out. As always, all information is for educational use only, not making advice about to buy, sell, or hold, or what's in screen and not make actual trades, blah, blah, blah. I was trading CRON yesterday, nailed the breakout. I was in at 20.7, sold 21.18, just doing small shares, so I didn't make much money, but hey, beats a kick in the whatever, but good breakout pattern. I bought the first breakout, sold up there, okay? One thing I do encourage you to start testing, at least I am, is OTO orders. I've never done those until this past week. I've only been day trading 20 freaking years, but I'm old school, and I grind out my trades. I'm a grinder. I grind out dozens of trades a day. The OTO order flow setup automates the selling side of the equation for you, which is a big plus when you're trading as much as I do. So I'll follow up with additional YouTube tutorials and I cover this in depth in my live tradingtheopen.com room, which you should all be a member of Trading the Open, or try it out at least if you haven't been a member. I trade live in front of everybody daily. Anyway, so you put a stop. I'll put a buy stop limit with a dime window on it for a day. Let it hit, and you set it up with an initial trailing / initial stop value somewhere for day trade between 20, 30, 40 cents based on the last. Make sure that that's good to go, and you can trade that way. The other strategy that I am testing extensively is arbitrage plays. And now typically I've been trading TQs versus TVIX, but I'm going to have to switch over to SVXY. So my point in bringing this is SVXY. When it goes up, TVIX goes down, and vice versa. Another one that I day trade routinely is the pair. I trade them in pairs. LiveU versus LiveD. It's kind of fighting. The goal is at worst you get break even, and that's the only relationship that I've found that's a consistent guarantee in the stock market. The only thing guaranteed in the market is the inverse relationship with a perfect negative correlation between the long and the short. Especially good is leveraged ETFs. So some days the biotech ones are not very good to trade, so I'm not a big fan of these every day, but usually 1 or 2 days a week they'll run hot. And like Thursday ran hot on LabU, around 46 up to 50, while LabD was plummeting from just under 27 down to 25 and change. Anyway, the trick is, what I do is you set a buy order, say 50 cents above the pre-market high in each of the two, or hold them overnight and play the gap or whatever, but put in the trade for each one, and the one that starts to work out, you scale into, you double down on the trade. So maybe in, say 50 shares, and I add another 50, then another, maybe the 100, and I end up buying the top and I sell it all right there, make my profit here. Wouldn't trade it because it didn't get over the 50 cents. And this is 930 right there. I know it's hard to see, but the buy stop would be, say, 27.40, and that never would have hit. So you put in orders for both the long and the short instruments. So another quick tip. For those of you new to working with me, I have done as much as almost 5 million in a single year, so not a bad trader. I've spent way too much on commissions lately, just under 18K since almost all of this is October, November, December. I got all excited when the market started selling off, and I was trading TVIX like a son of a gun. Anyway, I've done just, I don't know, what's this, 4,700 real money trades, almost 5,000 trades in the last 4 months. What other educator in the entire world can prove that they've done this much trading? That would be hear the crickets, there would be nobody. So that's why I've got so many of you here. Thank you. My lessons learned is what my business has been built on the last 20 years. All right. How many of you agree that it's kind of important, if you're learning from an educator, to demand that they show proof from a real money live trading account? And the way to tell that it's a real account is look at the commissions that they show. That's the aha differentiator. If they're just showing that they're supposedly making trades but there's no commissions, that means it's likely a demo account. These are real money trades and lots of commission money I paid, but I learned a lot, so it's money well spent. Anyway, the point is, thousands of trades I've done, I bring to help you guys in my live resources. You can join free at trademastery.com/join for the free members area, trademastery.com/join. My live room is Trading the Open, and swing trades are at Swing Scans. So let's continue on. Our S&P key S&R levels, 2722 is what I'm using for R1. The major resistance is at the 200 SMA at the 2740, right? So that's the major and Great Wall of China. We're going to see if we can punch through. It may well punch through to a fake out, false breakout. So be on the lookout for a false breakout there. And then a big capitulation sell-off. And then I'll be trading TVIX back again aggressively as it runs up when the market sells off. So always be thinking a step ahead. I am. That's what makes for a great trader, is really small stops, position sizing, scaling, playing the field, and having an intense math and numbers P&L focus, not being a chart talker. People that just talk about charts, just talk about charts. Show me the money, all right? Anyway, 2722 is our key R1 level in the S&P. 2677. This is about a 2 or 3 day low. Right here would be the first place I'd start looking to short the market, or in my case, I go long the inverse is right there. What's hot lately? CRON. This is one of my picks week before last for SwingScans members. So if you are a swingscans.com member, you got the trigger back here, and congratulations, it ran up quite a few points. I have a shooting star up here, so we have so what does that tell you? Where would you guys trail a stop? This is the audience participation portion of today's broadcast. If you were long CRON, I day trade this guy frequently. I should have been swing trading it, right? I would have made more money if I just swing traded. But where would you trail a stop if you're swing trading CRON long? Feel free to, this is the part where you post your answer in the chat box quickly. Excuse me while I drink coffee in front of a big crowd. Coffee is my friend. Anyway, the answer would be 1980, right? You had a shooting star, so loss of support somewhere right under the 20, right under that 19.8 or so would be a smart, intelligent place to trail a stop on an open swing trade. A rebuy trigger would be somewhere over 22. Okay, so CRON was one of my SwingScans picks. That continues to be a great chart to follow. Also, when we cover in the day trading live room. YNDX, that was a pick for our members last week, and it's starting to work out. It's gone up a bit. Always play defense. Hey, speaking of which, who do you got? The Pats or the Rams? Football, hike. Super Bowl Sunday coming up tomorrow. You make the call. Pats or the Rams? Who you got? New England or LA? You're right, Walter. That's the coffee I have. Major Dixon's Blood from Pete's. Well, you guys are almost 100% the same as me. Yeah, Pats. Go Pats. So, touchdown. Anyway, I digress. But yes, New England. Who likes the Rams? I mean, really? I mean, if you like the Rams, more power to you. I mean, I'm sure they've got some fans out there somewhere. But I'm a New England fan, so go Pats. Touchdown, baby. And we got touchdown charts here at Trade Mastery. YNDX, I called along for my SwingScans members. Remember, you guys know the huge percentage of winners I've had in both SwingScans and Trading the Open, right? You know, that's why the subscriber numbers are so high. So thank you for being part of my alert services. Small cap scans. For those of you that trade the cheapies, this was one of our picks for our smallcapscans.com members. If you trade stocks under $10, if you swing trade stocks under $10, be sure to try out smallcapscans.com, because this is one of our picks from last week. So I'm sorry I've been remiss in making YouTube videos and sending out winners of the week chart emails and all that kind of stuff. I've been busy trading, so that's what I do. Anyway, those are picks for my services that may also be good. I kind of double that. It's a good reason why you should consider my services by featuring winning charts of the week, but also they make for really good continuous plays, for next week. So they're good for next week. So new highs in MCHX, YNDX, and CRON all look especially good. Again, you really like a horribly stupid place to buy this would be right here. But somebody's going to buy it because they don't know how to read candles, right? Be sure to learn candlestick charts exclusively from Steve Nissen. Nobody else. Nobody does it better. So make sure you learn from Steve. I do. I did. It works. So anyway, the point is this would be a stupid place to buy because they're still under resistance. Somewhere over 22 would be a slightly smarter place to buy. Just saying. Hey, who else is hot? Gold and oil. Interesting to see the divergence or the lack of divergence between gold and the stock market. Usually when the stock market goes up, gold goes down. They're usually inversely correlated. Maybe not R equals -1 to use the stat geek term, but the correlation coefficient is usually a -1. But stock market's been going up. The S&P's been going up. All of our gold instruments are up too. Nugget, GDX, and JNUG. Of the three, I like Nugget best because the point range is the biggest. So I'll be swing trading this guy if it breaks. I'll probably wait for it to get over 22. I'm kind of a skeptic. I think it may be due for a false breakout and then a pullback. So I'll wait till over 22. My point is play defense. I circle back to my point. Play defense as a trader. The first thing you do when you put on a trade is always put in your protective stop. 100%, right? That's always what you do. That's why I like the OTO orders because it automatically, and that's probably a really, really, really smart thing if I can start creating more YouTube videos and training out there. Every order that I'm going to start doing will have an OTO order bracket set up so that once the long gets hit, the stop automatically is entered into the system. So that way I don't have to worry about screwing around with, did my order get filled? As a day trader, that's something that's really aggravating. For years you constantly click and see your portfolio or get the little alert, the order got filled. Okay, now I got to scramble to put in the stop. Well, with OTO orders, one triggers the other order flow. You don't have to scramble to put in the stop. And I'm late to the party with these. I just started using OTOs this past week. I've only been day trading since 99, 20 years now, full time, but we live and we learn. Hey, what else is going on? Oil. Well, okay, let's pull up the UWT chart. Oil is starting to go up. These are all oil long instruments. The other thing to pay attention to, and I know we've only got a few minutes left together. Boohoo. Be sure to join Swing Scans if you're a swing trader and Trading Open if you're a day trader. The trials are guaranteed, money back guarantee on the trials. I think I've had all of like 4 people out of hundreds and hundreds ever ask for their money back on any of these things because they work so well, right? People like it. I work my ass off. I'm trying to clean up my language. I work extremely hard on behalf of the world's traders. Right now, all the inverses are starting to look good. The ones that I'm focused on most, again, if the stock market stalls and drops, our inverses are going to flip. SOXS, the semiconductor short, is taking it in the shorts on strength in the semi sector, so it's way down here at 9. I'm looking for a pivot for a swing if it gets back over 10 and change, maybe 10.20. Again, not a trading recommendation, but 10.20, pay attention to that. I'll come back in a month, and if it's back up at 14, I'll say, I told you so. I'll try not to say I told you so. TVIX I especially love, especially if it gets back. I'd love it more if it gets back over these moving averages. So if TVIX recovers this 46, 47 range, this is a volatility index tied ETN leveraged. So for experienced traders only, they even make you sign a special. I understand this is for experienced traders only thing at your broker before they'll let you trade this. This is for the big kids. I've been trading this thing for so many years. Anyway, my best trade of the recent history was I made over it's $1,000 scaling in a day trade when it spiked up like 2 or 3 points, and that was fun. One of my traders, Louise, said it was lucky, and she's right. It was lucky. It was even more lucky I was there in front of it as it was running up, so I could double down on the trade, and I sold near the exact top. So, and the screen cap of that is in the proof of the P&Ls in my Twitter feed somewhere. Anyway, call of the month is long in this guy if it gets over the MAs, if it gets back over 46, 47 TVIX. That's my call of the month. The market may surprise me and keep running up. I'm curious, how many of you think the market will keep, I'll ask you guys again, you guys and ladies again, how many of you think the market will keep going up from here? I mean, I think it may well, odds are that'll keep going up for a bit. I should say, how many of you think the market may pull back or drop soon? Will the market keep going up a lot, or is it kind of due for a pullback or a reversal? We're still barely in a technical downtrend, I think. We were at a key inflection. Actually, well, if you connect these two dots, we're not quite at the, but technically you've got to connect right here I'm not a CMT, but technically we did break the trend line. So technically we broke the downtrend. The market's back alive. Lower lows and lower highs. This is no longer a lower high when you connect to it. And the correct way to connect the dots on trend lines is that. Again, though, it depends on the time interval you're using. Yeah, so we did break the trend line, right? That's the trend line right here from there to there to there. If I were taking my CMT test, I would pass with flying freaking colors. Anyway, we broke the downtrend line, so that will attract some speculative buying. But I'm kind of a skeptic. I still think this is a surprise. How many of you are surprised? Market always surprises me. I thought we'd get about this much of a bounce, right? I was expecting a bounce to last around 25.40, 25.50, and then resumption of the downtrend. But hey, it kept going up. So just goes to show, no matter how many years you've traded, no matter how many millions of dollars worth of stocks and ETFs you've traded, like I have, very happily too, the market will always still fake you out and do what you don't expect. So what you got to do is duck and weave. You got to investigate. I even bought a special hat. If I can put this one on. It's supposed to be a Sherlock Holmes hat. You're supposed to be like a market detective, right? Like my colleague Steve would say. The game is afoot, Watson, and the charts are out there. And we've got to solve the mystery of the missing money. If money is missing from your trading account because you've been taking stop losses, stop the madness. There's got to be a better way. And the way is technical analysis. Even more important than being a good market technician is a good trade manager, right? Risk manager. So if you're trying to throw touchdown passes, remember the stupid way to trade, you can be a grinder or a scalper. A grinder is what I do. I grind out thousands of trades. I take minimal risk up front on each one. That's the smart, safer way to trade. Like my colleague Tom Sosnoff from Tasty Trade. And you got to watch Tom on YouTube. He's my favorite YouTuber because he talks not about charts, but about risk management and volatility and all that other good stuff that you need to learn about. He and his team say trade small, trade often. I completely agree. I'm the definition of what to, how to do that, right? Any smart floor trader is going to tell you grind out your trades. That's completely opposite than what you see these young kids on YouTube doing, like 3,000 share trades on momentum plays, trying to swing for the fences. You're going to get a hit and a miss. And what they don't tell you is those guys are either using demo accounts or they're hedging by using a separate account that they go short in that they don't tell their sheep about at the same time they're going long. They do all these kind of shenanigans to disguise what they're doing. So don't trust that. Trade small, trade frequently, manage your risk, add to your winners, scale out of the losers, make the numbers work out. Okay, folks, well, I wanted to wish you the very best for a spectacular new year ahead. And again, the bright ideas of the month are, that was a good Chronos breakout, right? I bought 2070, and I used the OTO on this. I think it was a 40-cent trail stop, and that took me out at 21.18. So I never buy the bottom. I bought right above the previous day's high. That's where my buy stop order was. Then I put a 40-cent trailing stop on it and profited. Now, if I'd done 1,000 shares, that has something to talk about. I only did 70 shares to test, right? So I'm testing. The more consistency I get out of my test, the larger share size I start allocating. So instead of these little test, 70 or 100 share trades, I'll start getting back to my 200 and 300 share, and then 500 and 800 and 1,000. My goal is to trade my way out of this business, or at least make it secondary to what I do in life. And so I wanted to welcome all of you aboard. For those of you who are with me on the journey, it's been spectacular. It's been amazing having the support of all of you, right? I really appreciate the epic turnout. So thanks to one and all, that and the arbitrage, kind of somehow figuring out how to play the inverse ETFs correctly. I'm still trying to figure it out. Because what gets you is with any trading strategy is choppiness. I mean, if they both go up a little then pull back, that doesn't, there is no strategy that's going to help you make a lot of money with that. What we need is strong trends up or down and figuring out the math on that. So, and yeah, Mura, yeah, GE's been good, right? I think it went up to 13 off the 10. But yeah, GE's been good. I agree. It's been a good run. Costa Rica, Peaberry. Okay, thanks. Dude, coffee talk. Thanks. CGC, Ruth. I'm just going to buy new highs in Canopy Growth. I don't see any. I also want to buy Tilray, but in the pot stock, but it's still expensive up at 83 to 92 a share, whatever it's at. It's a little pricey, but I still think Tilray is my second. CGC is my favorite. Kronos is the second favorite, and Tilray is my third favorite in the pot stock territory. I didn't mention CGC. It's been a little choppy lately for day trade, so I haven't been day trading it. I've been day trading earlier, but it's a spectacular runner, right? It finally broke the 50. It's likely to hover around our 50. I may well go long over the 52. But Canopy Growth and Kronos, yeah, thanks for the reminder. Pot stocks for 100, Alex. Tell them what they won. InBev doesn't look too great. It's been down there 6-7 a share forever. See, I actually know all this stuff, and I'm really trading it. Tilray got hammered after the lockup, so it's still a downtrender. So it's in the pot stock territory, but not as good. I like Kronos number 1, CGC number 2 over 52, and Tilray number 3. But I don't like that chart at all, so I'm not going to trade that one myself. But yeah, thanks for the reminder. Yeah, CGC we used to cover in the live room a lot. We didn't this past week because it hasn't been as good as it was a few weeks ago. It was really good for a while there, for a week or so, and it went sideways, and it's been kind of mixed last week. So it'll likely be a good runner if it breaks back over 52. So at least that's where I'll be trading. Anyways, I got to run, guys. I've got swing scans coming up in 5 minutes. So I wanted to wish you all the best. We've got some spectacular opportunities out there. If the market drops and chops, my tip is, as always, be ready with the inverses. I like the fact that they've all come back down again because now it's kind of a reset button, and they're all cheap where they were a few months ago. They do that. They run up. Just look at the February, right? Patterns repeat. That's our final thought for the day. Patterns repeat. Here's TVIX. Ran up back in, February is the high. But here you can see April, same thing. Ran up, ran back down. Up, down, up, down, up. Ran back down. A shooting star right there, right? Another bearish upper shadow here. I'll feel warm and fuzzy if I see a hammer down here, bullish engulfing somewhere in the low 30, the low 40s range, high 30s. But anyway, after the up and down, it may well keep dropping on down. So we will see. We'll see what we see. So the S&P is, who knows? We'll see which way things go. You guys take care. Thank you so much for being here. I appreciate it. Be sure to join me. Only got a couple of minutes left here. Ye old call to action. Yeah, my word, I work really hard on your behalf and my behalf because I'm trying to make as much money as I can in my own real trades. And as I develop these strategies and these techniques, I want them to be useful in all market conditions, number one, and consistent, number two. And I think a combination of things like OTO order flow, arbitrage plays, and position sizing, that's how it works. So for the live room, join me at tradingtheopen.com. For day traders, if you're a swing trader, join me at swingscans.com. Anyways, take care, and I'll see you guys next month, the next first Monday of the month coming up in March. So take care. Goodbye for now.